April, welcome to the show today, to the Cash Rich Exit. We're
Yeah,
happy to have you.
thank you. Nice to be part of this, Colleen, and looking forward to our conversation today.
Yeah, and I mean, it's so interesting how one connection leads to another. Because I believe it was a previous guest on the podcast that introduced us. It was
Yeah,
Michael Black of
yeah,
Richter. Yeah,
yeah,
so degrees of separation, and here we are.
yeah, yeah. It's interesting, and I think it kind of leads into some of the things we're going to talk about. But Michael is in a similar field, but we get along really well, and we try to collaborate whenever possible, which is why he provided the introduction to you,
Mhm.
thinking that we each have a little small different area that we provide different values. So I appreciate that he made the introduction.
There you go, right? So,
Yeah.
I mean, M&A, business transitions, this is, the direction we're going here. What inspired you to specialize in this area? This might be an opening also to tell us a little bit about your background and how you got
Yeah.
here.
Yeah. No, it's a perfect way because the background brings it all together. In that, I was a finance major in university, loved that, spent most of my life in banking, started doing like with commercial banking, corporate banking on the adjudication side as well as the sales side. Eventually ended up getting into the head office, doing like project work, still kind of in the risk management side, but a lot of project work. And then when I left the bank about 15 years ago, and just politics and not as fulfilling after a while, but I I realized I had two kind of different skill sets, and I wanted to find a way to blend them. And I also realized I really missed working with clients more directly, because the last 10 years of my career had been kind of head office stuff, which was very you know, bureaucratic and
Right.
administrative, right? So I really missed working with clients. Always wanted to do M&A work because the finance background. I realized that selling a business is like a project, which is what I was doing my last part of my career. It was a
Mhm.
project, and it's a complex project. So, there's people have an idea that I have to sell or I want to sell or I have to figure out what my exit will look like. But most people don't know how to approach it because there's just so many variables and so many unknowns, and it's just a moving target all the time. So using that skill of putting a project together and then getting back and dealing with clients and realizing the structuring in itself is kind of complex as well, that this brought the two together. So I did work with a couple brokers, business brokers at the beginning of my career. I always felt that their approach was a little short-sighted.
Mhm.
They were very good at the specific transaction, but I felt that we would be much more successful if we spent a couple years in advance of the actual deal, helping the sellers, the owner operators get their business set up and established and understanding the process better.
Right.
So
Yeah. So that leads me to wonder about how is your approach different than, sort
mhm.
of more of a traditional business broker or maybe a larger M&A firm.
Yeah, yeah. So I have kind of focused on the smaller segment of clients, which is again another reason a lot of the other M&A firms will work with me because things that are a bit on the smaller for them, like we're saying, like under 20 million or under 30 million, just depends on the complexity and how it's structured. Um, but so I can deal with a lot of the smaller clients that they wouldn't naturally or normally get involved with. And I would say I'm trying to meet them a couple years before they actually need to sell or are targeting to sell, so that I can coach them with ways to say so they understand what a buyer's looking for. They
Mhm.
understand how the valuation would be determined, which is, figuring out multiples of the EBITDA, that kind of thing. But there's a lot more than just the financial part of it that goes
Mhm.
into the risk calculation, right? And that's what the buyer has to evaluate. And the sellers don't always know that until someone like myself sits down and walks through the process. So we do an assessment for all of our clients, and we do them for lots of clients that we never even take to market.
Hmm.
We would just help them understand here's the financial pieces, but here's all the qualitative pieces that also determine the risk of your client. And those are the things that a buyer might get excited about, or they might get be concerned about. And
Hmm.
if they're concerned, then they consider that higher risk, and that's where they would drive price down because of that.
Yeah. So
So,
yeah, how how does
yeah,
that work in terms of an engagement with your firm? What remind us the name of your firm? How,
transition architects.
there you go, Transition Architects. So
Yeah,
that makes a
yeah,
lot more sense. And
yeah.
it's not da 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 M&A. It's Transition
No,
Architects because you're creating the blueprint for the entire process, really.
that's exactly right, actually. So we do the transaction, but I'm finding that transactions are much more successful when we've taken that time up front to really allow the seller to understand the process and how the valuations are determined and how it's impacted, and give them a time to address some of those risks up front. So a normal transaction for us would be, we would be dealing with an owner operator. Very often they've been running the business for, many years, and they're later in life and starting to think of what's next,
Hmm.
and they've already talked to their kids, and the kids aren't interested or not capable of kind of picking up. So they realize they have to go and find an outside buyer, but they don't know how to approach it. And we would start with them usually a couple years before that transaction is supposed to happen, and we would evaluate what the value is today, or
Hmm.
it's, in many ways, it's kind of a guess because it's a range, and
Hmm.
I'm going to give them what I think a buyer is going to see are the risk factors and the good factors, but that's going to be part of the negotiation as well.
Hmm.
But if they have this assessment done, which details all of, like I said, the quantitative and the qualitative pieces, then we can walk through the areas of concern that they can address before it goes to market. So one of the very big issues for smaller size businesses is that the owner is too involved in the business. And it makes it very hard to sell a bit. How can you leave the business if you are the business?
Yeah, it is a core um, concern that comes up, and all the different drivers of a the value of a company, the the owner's direct impact into the day-to-day operations is one of the biggest ones.
It totally is. And
Yeah.
I mean, that could have been driving their success for all these years,
Hmm.
but they can't walk away if there's not a backup person in place that they've transferred some of those skills and knowledge to.
Hmm. Hmm.
So that one that comes up like all of the time. I literally was at a client's yesterday, and I had done a presentation to them a couple of months ago, and they said that just stuck in my head so much when you reinforce the need to have backup management. They said we've hired 3 people since we heard you
Oh,
speak.
wow. That's
It's a
taking
fairly large.
action. Yeah, that's
I
taking
was
action though.
really amazed that they took it to heart, and they said, yeah, we realize that we're just too engaged in the business, and we're still going to be there, but more at a strategic level
Hmm.
versus an operational level.
Hmm.
And they are training people right now to kind of fill those roles for them.
There's a mini success story.
Yeah, no, it was wonderful. Yeah, and it was really great when you hear people actually taking your advice to heart and listening to it. Yeah,
Yeah,
that was
yeah.
a good one. So yeah, so we do the assessment. We do assessments for any size business, big, small, any even clients that aren't necessarily saleable, but we can still explain the process to them, and then there are different options that we can suggest to them if they need to.
All right. So
Yeah.
that from what you've just talked about, there's sort of two angles I'd like to approach here. One of them
Hmm.
is on this topic of being saleable or not. I guess
Hmm.
some a business owner comes to you, they say, help me with, I don't know how they probably wouldn't word it this way, but let's just say that in essence, they're saying, help me evaluate my business and how I might be able to find a buyer. And as a result of what you provide to them, it's not saleable. Then what? What does that look like?
So,
What do you
um,
do now?
so, and this is kind of maybe the tricky part, and this is why what I'm doing is different than the larger M&A firms, is I'm often dealing with the smaller clients, and they're harder to sell actually because they don't stand on their own as much. That we often have this owner operator dependency that's part of it. The numbers don't always make sense for a big like a private equity firm or a family office to come in. Like they're
Mhm.
looking for larger return on investment. So I'm helping them find usually a strategic buyer. So the different kinds of buyers, you've got your
Mhm.
financial buyers, you've got your strategic buyers, and then you've got kind of your owner operators. And I would walk through that with them. And, depending, like some companies are just too small, like to sell to an outside buyer. But often within their group of contacts, they may know someone, a manager, another client, a competitor that we can help them put something together in those cases as well. So that is your other option to try to sell a business. Um, the cash and the structuring is going to be different, but it would allow them an exit strategy in that case.
Right. Um, the other thing that was coming up for me were, successes. So
Hmm.
love to hear, one or more examples where you've worked through the architecture,
Yeah, yeah,
the building of the blueprint, and there was a success at the other end for all the parties. Um, what do you have to
yeah.
share with us? Yeah.
Yeah. Uh, there's, they're all kind of interesting successes in their own way. And that's kind of why I love this work because it's very interesting. It's creative in many ways. And you wouldn't necessarily think that in finance, but it is because every deal ends up being a little bit different. And it
Hmm.
depends on what the seller's needs are, what the buyer's concerns are. The last company I did kind of with another broker, which is the reason I started my own company, because the broker I used to work for would never have set it up this way, but it was a fairly large client. It was growing. They had tried to sell with another M&A firm before, had a couple of bites. They all fell apart for one reason or another. They were very, very frustrated. When I got involved, I was trying to sell it, 100%. There was three owner operators, and we were trying to sell it 100%. And I had a couple buyers look at it, and they were very interested because it made a lot of money. It
Hmm.
made tons of money. It was very successful, but they were so worried about the risk of the owner operator that all the buyers ended up backing away kind of at the last minute and said it was just too high risk. So then I sat down with the sellers and said, I think we have to try something a little bit different. And he goes, well, what do you mean? I said, would you be open to maintaining a minority position in the company? And this was an approach that had never happened in this firm before. I know larger M&A firms would do that all the time, but
Hmm.
typically the scenario in the smaller world is to go 100% sale kind of thing. Um, and they said, well, long as I can work less and I can manage the needs. And I said, well, of course, like the buyer's going to buy 80% or 70% or whatever the number is, and they're going to be managing strategy and finance and admin and HR and all those things that you really don't like anyway. And but they need to know that you're going to stay and be committed for three to 5 years probably just to mitigate the risk. So two out of the three agreed that they would stay.
Hmm.
One of them still wanted out fully. And once we changed the structure like that we were open to keeping in minority position, we got two offers like almost immediately.
Really, eh?
and both of them were solid and were competing against each other. So all of a sudden,
Which becomes an ideal situation.
it was beautiful. It was beautiful. And then the offer ended up the multiple ended up being almost twice what we'd evaluated at. By the time we got now,
Mhm.
their results were getting stronger and stronger too, which was also playing into it. But so we were able to find a buyer, get a competing offer.
Mhm.
So we drove the price up, which we were able to make the terms more favorable, like more cash, like more things up front. Because a lot of it isn't just the dollar that you're selling it at,
Right.
it's the structure of the deal as well.
Hmm.
So between whatever they were getting in cash, whatever they were getting on a deferred basis, then there were shares that they were holding, which would probably double or triple in value within a few years. And then, because it was competitive, we got them to throw in some bonuses. And honestly, they walked away making almost twice what they were expecting to make from that deal.
Yeah.
And it was change. Now, not 100% was up front. There's the potential. You had to, bank on
Yeah.
the potential,
Yeah.
but the company's still doing really well. And I'm sure they've cashed out on all of the
Hmm.
shares and
Yeah.
everything that
How
they
long ago
wanted
was
to.
that, April?
That was just at the beginning of COVID. So that
Oh,
would have
okay.
been
So,
2020. So 5 years.
five
And it's
years.
still, I see them growing and hiring all the time now. So it was a really good, um, collaboration between
Mhm.
someone coming in at a manager level and then
Mhm.
needing the operational support. And these guys actually loved the work they were doing as the operations. They
Mhm.
didn't love dealing with computers and taxes and HR and all that. So it I think everybody ended up very happy and it was very, very lucrative, the sale for them.
Excellent. What type of business was that? I know you have to
It
be
was
careful not to
trade, yeah, I have to be
describe what it
careful,
was.
but
Yeah.
a trade
A
business.
trade business. Okay.
But the other part that had been concerning to the buyers is that it was basically just an HR company in many ways, because when you're doing services, basically they had, you know, 400 people working, but all kind
Hmm.
of as contractors
Hmm.
that they would send out on contracts. And so they didn't have long-term contracts and they didn't have staff that was like necessarily working directly for them, but they were able to maintain, both sides of it very well and very highly regarded in their field.
Yeah.
So the training and the sourcing of staff was really important.
That's a
Yeah.
great example.
Yeah.
On the flip side, on the
Yeah.
flip side, we were talking about this before we officially hit the record button, but just, an example of something that didn't turn out so great, but was a great sort of tuition building learning
Yeah.
experience. If you could share with us as
Yeah.
things that can happen. It's not all it's there, not every deal is a success in a sort of
Yeah.
standard way of looking at success.
Yeah. So, and I guess it depends on how you define success.
Mm,
Because I have found that this is interesting actually, is the approach that I'm taking now, I almost always sell the business. Almost 100%. But but the difference is expectations. The
okay, yeah.
people, the seller, and that's one of the things we'll bring up is why is it more successful? Is that
Hmm.
I'm really working closely with the sellers to understand the concerns of the buyers and limitations. Um, and if they're reasonable, like prices come down sometimes, you know. The one that wasn't too successful was they waited too long, and then there were health issues and then you've
Okay,
lost your negotiating edge
right.
and then there's a lot more risk for the buyer, a lot more concern for the buyer. So we still ended up selling, but it wasn't as favorable and a lot of it was as an earnout instead of cash.
Right,
So
right.
we did end up, finding a deal that maintained the business she was very happy about her staff got the husband had died actually and she
Yeah.
was managing this business, didn't understand it. And then there was, one problem after another. Like they didn't have strong
Hmm.
because we didn't get involved until a little bit later. So they'd had a couple of problems already, and then you're on your heels when you're trying to negotiate, and that's not the best
Right. So
scenario.
you got the sale done, but all the conditions were maybe not as favorable as they could have been in a different time frame or different
Yes,
general conditions. Yeah.
right.
Yeah.
So one of my kind of really important words of wisdom is like to sell when things are going really well. And it's sort of counterintuitive to people because why? It's going well. I'm making lots of
Mhm.
money. And that's exactly what a buyer is looking for, though.
Hmm.
A company that's easy to take over, that's making lots of money, that is predictable, that's well run. That's what buyers get excited about.
Hmm.
If you wait till there's problems or results are going in the opposite direction, then it's very, very difficult to sell it at all or to get what you're hoping to get.
Yeah. Yeah,
Yeah.
it makes sense. Now, that suggests, April, that you primarily work with the seller. Is that right?
Yes, yes. Mostly that's how I'm engaged. And again, I've worked for on both sides, but I would say primarily, like, and again, every approach is like sometimes I come in and just do the negotiate. They have their buyer already, and I just help them negotiate and structure the deal. So I mean, I do lots of just very pure M&A work, but kind of the target market is where we
Hmm.
have that time up front to do the coaching and help them understand the whole process of selling your business and how they could get the best dollar possible.
Right.
Yeah.
What types of, I mean, we've talked about size to a degree. Maybe you could describe some of the typical businesses that come to you or that you like to work with.
Yeah. I would say typically, as far as an EBITDA range, kind of under 5 million is where I stay. That's how I play with the other M&A firms. We sort of do that. I tend to well, right now there's a lot of service businesses that I've been
Hmm.
involved with, and it just seems like there was a lot of people that got into the trades and were successful and grew it, and then
Hmm.
and then they're at that
And
age
it's
right
just the
now.
demographics, right? Of the.
Well, yes, there was a report by the CFIB
Hmm.
last year, and it's something like $2 trillion have to change hands because of aging business owners in the next decade.
Hmm.
So that really is, and I mean, we've been saying this for quite a while, but I think it got delayed. Some of these business owners, like the last deal I just did, the owners were in their 70s
Hmm.
and should have sold it years earlier. And again, this would have been another good story because this deal had to happen. It had
Hmm.
to happen because they were older. One of them had health issues. We were lucky we had a really good buyer and there were lots of bumps, but we worked very closely with the buyer to get through the bumps and the sellers were being reasonable in their expectations.
Yeah. So the coming together of all the pieces.
Yeah.
Right? Yeah.
There's a lot of different pieces, and that's why it's this kind of a complex project that needs
Hmm.
someone who's done it before to really have a better chance of success. Because I mean, the worst scenario is you've put in all this time and energy and commitment, and then the deal does not close. That
Hmm.
is just heartbreaking for everyone involved at
Yeah.
that point.
Very, very
Yes.
frustrating.
Hmm.
April, the Self-Made Nation here, CEO, founder, business owners who are listening who might be interested in chatting with you about the services, tell us where they can find you.
Okay, sure, yeah. My company's called transitionarchitects.ca. So I've, or you can find me April Harbottle on LinkedIn or Google or anything. It's not a common name, so it's easy to find me. But certainly everything's on transitionarchitects.ca. My phone number's there, my email's there, April@transitionarchitects.ca. We have a team. I've got someone that works with me in Toronto. I've got someone in Kitchener. We all kind of collaborate. We work somewhat independently, but together as needed. I cover Southern Ontario mostly, but we can handle like we can deal with anybody within, driving distance at some point. I'm based out of the Hamilton area right now, but most of the work we're doing is through Zoom. And
Hmm.
certainly, I want to see them and meet them initially just to build the rapport and the trust. And once we've done that, an awful lot of the work can happen through Zoom and or key meetings, I'll be there kind of thing, right? So we'll just make it happen.
That's
But
true.
it's yeah, no, it's interesting work and I think there's a really very big need for um ad expert advisory support in this space because most M&A advisors really just want to deal with the very large businesses. And
Hmm.
it tends to be more of a financial transaction versus the smaller businesses that we're talking about. There's a lot more emotion involved,
Yes.
and it's scary. And they really do need someone to kind of walk them through the process and walk them through so many stages of fear, concern, uncertainty.
Hmm.
What am I going to do next? Am I getting ripped off? Does it make sense or I don't understand? There's a million emotions that they go through until we get to the other side.
Yeah, it's all the readiness factors, right? So
Hmm.
so we can talk a lot about the business readiness, which is a lot of
Hmm.
what we've talked about today. But then
Yeah.
there's the owner's readiness from all of those, what we'd say like soft factors, like the
Yeah.
emotions, the identity of being associated, and also the personal financial side, which is the work that we do here, looking at wealth gap analysis.
Yeah.
And it's why I'm curating this podcast and bringing guests like you on to look at all
Yeah.
of those areas. So where we sit as being able to provide professional expertise on the personal side, but the thing is, owner operators, how do you? It's pretty hard to have a disconnect between the pieces. They overlap. But to your
Yeah.
point, the
We
emotional
work.
readiness is so important as well.
For sure, but the work you're doing and that I do, we are just naturally synergistic, because they ultimately it's all about what they need personally once they've detached from that business, and you're helping them understand that maybe they do have enough, or maybe first I got to figure out what that business is worth and how long it's going to take to get it. But then when we give them some indications on what that would look like, then they know, okay, I've got this much personally. Once the business comes, I've got this. And you can help them understand how that's enough for them to be comfortable going forward.
Yeah, yeah,
Yeah. No,
exactly.
we fit very well together and I think that's another part of it is looking holistically at the client relationship and their needs. I think there's
Exactly.
good value there and I don't think there's a lot of people doing that work, bringing them together like that.
Well, frankly, it's easier to just manage in the investments and have those conversations. It's a lot more work to connect and collaborate, but it's also much more fruitful in the long run and
Hmm.
rewarding for everybody. So, yeah. And on that
Completely.
note, April, what would be your fun, frank advice that you would leave for the Self-Made Nation?
Yeah. I I think it's back to my earlier point about, well, firstly, I think everybody should get an assessment done like right away, honestly, because it just sets the stage for what's important in the future as far as value, but risk is a big thing too. So value is only part of it. It's
Hmm.
like what are buyers going to be concerned about and how can I fix them? So number one, and then sell it like sell it when you don't need to. That
It's
I,
like going to the bank. Wait,
yeah.
you get an operating line, you get a personal line of credit, whatever, when you don't really need it, because that's when
Yes, exactly.
you're gonna get access to it. When you really need
Totally.
it,
Yeah, you're
tougher,
not going to get it. No, that's for
because there's
sure.
probably a reason you really need it.
Yes,
Yeah.
exactly. And so, but selling when you're kind of in control of the
Hmm.
situation is much easier than not selling. You know,
Yeah.
like I said, I've had all these examples of people getting sick or results are turning around. I'm working on a deal right now, and we've had to renegotiate the price down twice,
Yeah.
because the results are not good.
Mm-hmm.
And I'm surprised the buyer's actually still sticking with it, but
Mm-hmm.
I think he's still committed, but the structure's changed to his advantage a lot more, that's for
Yeah.
sure.
Yeah. Well, this has been great, April. Thank you so much for joining us here on the Cash Rich Exit podcast.
Thank you. Thank you. I really enjoyed the conversation, and looking forward to doing some work together someday.
Sounds good to me.
Okay, I love it.